Minutes away from the closing bell, and markets are still surging.
Yeah, look at this. Dow Jones Industrials now up about 348 points, and that's not even the highs of the session. 13,307 is where we are right now. The high today has been 13,325. So we're a little bit below that, but not by much at all, which leads to the question, is this the beginning of the recovery from the credit crisis or just one of those blips on the volatility radar? Let's check in with our Fox panel, and once again, it's the usual suspects. And Peter, come on, it's up 342 points. Isn't this the start of something new?
No,
to quote High School Musical, by the way.
No,
nice.
Bull markets climb a wall of worry. Well, bear markets slide a slope of hope. And these big rallies, they're designed to give false hope to people. It's like slowly boiling a frog. You got to sell into this rally. Don't read anything into it. The problems are just beginning. This is a bear market rally, nothing more. And the problems for the economy are only going to get worse.
Well, Mike, you put your money where your mouth is. You go out and buy stuff. Would you be selling with this rally or buying?
By the way, as if there hasn't been worry out there, I think the wall of worry is pretty high. Look, again, I was talking to Wilbur Ross, one of the most astute value investors yesterday. He's buying financials. He's moving in here now. I think that speaks for itself. I think there's a lot of important things going on here. You look at a 10% decline in crude oil prices. You look at some very, Peter follows currencies, some very interesting so-called commodity currencies. The Canadian dollar down 10% in the last month against the U.S. dollar. The Australian dollar, another interesting commodity currency, down. We've actually seen, as Peter has been forecasting, some liquidation by China and Japan of treasuries. But guess what? Our interest rates have come down. They haven't gone up. A lot of positive things happening here. I think the market looks good.
Jim Petacaucus, what do you think?
Well, listen, if you're a long-term investor and a long-term believer in America, you know what? These kind of declines, these 10% corrections can be scary, but you know what? That's the time to buy. That's not a dollar cost average.
Yeah,
buy all the way down. Listen, if it's apocalypse now time, like Peter said, and we have a recession on the way, then you know what? Then the damage is maybe only a half over, if that. But I don't think so. I think the job market remains resilient. I think the income gains remain good. We just saw that this last weekend. So I think there's a lot of reason to be bullish and to think that going into 2008, that maybe the worst for the market, for the economy, is happening right now, and then we accelerate going into next year.
And Nicole, Mike makes a very important point. If the smart money is going in and buying the financials now, isn't that really the test of whether this market has bought out the financials?
Yes, I think the financials are really where you want to keep an eye on. I think Wells Fargo was upgraded today based on the fact that the analysts believed that it had been beaten down so far. This is a buying opportunity for certain stocks. And, of course, it's for the long-term investor, as Jim said.
And it came out with a $1.5 billion write-down, by the way.
Mike, give me something else that's a buying opportunity other than the financials that may scare away some people. What else out there that we haven't talked about?
Well, I happen to think the home builders, for example, that look terrible. And I hear
but
Peter
that's scary, too. You brought
that's
up Wilbur Ross. How about coal?
Wilbur Ross. No, I would not buy gold. Look,
coal, I said.
Oh, coal?
That's what he likes.
He likes coal. Coal had a good run. I mean, I don't follow it that closely. I mean, coal had a good run. I couldn't give you a very insightful opinion on coal right now. I had some coal stocks.
Where in your stock?
They pollute. They pollute the atmosphere. I don't know.
Just keep buying those home builders and the financials. I'll keep buying gold and you mentioned those commodity currencies. The New Zealand dollar is up 2.5% today alone. That's as much as the Dow. And sure, the Canadian dollar pulled back 10%. It went to $1.10.
But Peter, how do people invest in that? Tell them what way they can dip their toe into something that seems as sort of exotic.
Well, that's
as
a very interesting question. I'm glad you asked that question. But yeah, because that's what I do. That's what I've been doing for my clients for almost 10 years.
How?
What you do is you don't invest in the U.S. market. You go and invest around the world. You buy stocks in countries that have appreciating currency, so you get the wind at your back, not in your face. You buy stocks with low PEs and high dividend yields. And yes, you buy and hold for the long term. You buy in Singapore. You buy in Norway and Sweden and Switzerland and Hong Kong and New Zealand. Zealand and Australia and Canada. You avoid the U.S. market, and you invest in good quality companies around the world. And if you want to speculate, go into the emerging markets, and buy commodities. And yes, buy gold and other things that are in bull markets.
Jim Pettakakis, we got to emphasize here, this is not for the faint of heart. This is very risky trading. I think if people hold on a second, Peter. We have to put out a proviso here, because when you're trading with the likes of George Soros and people that trade currency all the time, you're trading with some pretty fancy traders. Jim?
That's absolutely right. I'll tell you, I agree with Peter that people need to have more foreign exposure. But the best way to do it, I say, for a lot of people, if you don't want to make this a part-time job to do some stock picking, don't forget not only just mutual funds, but these exchange-traded funds, ETFs, which not only can you invest very easily in foreign markets,
that spreads
but you can
the risk. And I think even Peter would not disagree with that, would you, Peter?
Well, no, I mean, I prefer to pick the stocks myself. But, the point is, David, the risks are here. The risky investments are in America. My clients want to avoid risk. They want to get out of harm's way. We're investing abroad to protect our wealth and preserve our purchasing power. This is not risky.
Here's what's wrong with that.
Some of the greatest value, you talk about good companies that present value. They're here in the United States. They're multinational companies. They produce more than 50% of their income comes from abroad. It's a way to diversify yourself. Those are undervalued plays. And just quickly on gold. Gold, even at $800 an ounce, where it is today, is still far below, in constant dollar terms, where it was in 1980. It should be around $1,600 an ounce.
That's
you
why
haven't
I'm still
made any
buying
money. If you bought gold in 1980, you're still hoping to get your money back. It's been a terrible investment.
That's right.
That's not true for stocks.
Mike, I didn't start buying it until 1999 when it was under $300 an ounce. I made a ton of money. And I'm making money every day.
I hope you're nimble enough to get out when it starts to go down.
But guess what? You could have made a lot more money if you bought Google stock, Peter.
Well, look, I could have made even more if I bought, internet stocks in China.
Or Apple, something a little more substantial than China.
But we'll see. A lot of people who hold Google and Apple haven't sold yet. We'll see in a few years how much money they made on those stocks.
Well, while we were talking, the Dow pulled back just slightly.
They were listening to Peter.
Yeah.